Hello, I am Dr. Osha and I welcome you to the course on financial management. The contents of the course will be, first you will have the introduction of the course and the basic concepts, then you have the time value of money, then you will have the capital structure, the cost of capital, the fourth unit will be the investment decision, and the fifth unit will be working capital management. The course objectives, the first aim would be to assist the learner to understand the concept, the theory behind it, and practice some problems in relation to financial management. The second objective will be to help the learner develop the logic for making financial decisions. It is not just about making financial entries, it is also about making better financial decisions. The first unit will comprise of three modules. First one, you have the meaning, definition and objectives of financial management. Next you will have, we'll discuss about the financial functions. The third, you will have the time value of money. Now let's pause for a moment. What are the terms that you would think of when you hear the word finance? Okay, you would have come up with so many terms such as finance, cost, money, goods, employer, labor. So there are so many terms that are related to finance. We will try to first find out what is the meaning of finance. It is a study which figures out how people, business and groups make and use money. The keyword here in the meaning is in terms of money. So how they make it and how they use it, as simple as that. The actual definition of finance according to the Webster's 9th New Collegiate Dictionary is that the money, resources, income, etc. of a nation, organization or person. So they call it as money, resources, income, etc. It can be of a nation at a macro level, at a medium level of the organization or the company level, and of the person or the individual. Need not be only money. There are other terms that are used for finance such as capital, funds and amount. The types of finance, if you see, there is personal finance, there is corporate finance and there is public finance. The public finance is otherwise called as government finance. The way that each finance is managed may be different based on the concept in which it is applied. Personal finance may have different objectives, corporate finance may have different objectives and public finance may have different objectives. So personal is at an independent level, it is at an individual level, corporate is at a company level and public or the government, it is more of a macro level. Now coming to the word financial management. Financial management is a combination of two words. You have finance and management. Finance, as we just saw, it indicates the resources and the funds. Management is about planning, organizing and controlling, and when these both are applied together it becomes financial management. So financial management is the process of planning, organizing, controlling the resources or funds of an organization. The actual definition of financial management is given by Howard and Upton. It is an application of general managerial principles. So this talks about the management, general management principles to the area of financial decision making, to this area. So applying management principles to the financial decision making is given by Howard Upton. There is one more definition that is given by Joseph and Massey. It tells that it is the operational activity of a business that is responsible for obtaining and effectively utilizing. So you get it and you use it. What do you do? What is it? It is the funds necessary for efficient operation. So how you get it? How you use it? What you do get and use? You use the funds. For the purpose of what? For efficient operations. So that is about the definition of financial management. Next is the scope of financial management. Why financial management? Why is it important? It is important because it is applicable in almost all the functional areas of finance. If you see accounts, the financial decisions are based on accounts, and again this is sort of a two-way process. Accounts is used in finance and financial decisions are again used in the accounting concept. Then if you see, finance is used in the HR field also. For example, you need to hire employees. How do you pay the salaries? How do you pay the bonus? How do you pay them the incentives? How do you provide proper working conditions for them? All those is covered as a application of finance in the area of HR. Then in marketing, right from product development to carrying the product to the consumers to providing after sales service, all these aspects involve an element of finance. Similarly, in the production, for deciding the product prototype, then to actually put the product into production process, you need finance. Then economics is also closely related to finance. There are so many aspects of economics, such as demand, supply, balance of paying. So all those is related again to finance. So finance is considered as the lifeblood of any organization, since it is applicable to all these areas. Now if you see the objectives of financial management, there are two major objectives. First is the primary objective and second is the secondary objective. For now we will see the primary objective. There are two primary objectives. First is profit maximization and next is wealth maximization. Does an organization exist for profit or for wealth? So let's first see profit maximization. When you see, profit is generally described as revenue minus expenses. That is, the income minus expenses will give you the profit. So why profit? Because it is the ultimate aim of the business. Any business exists for the purpose of earning the profit. If you ask, is the business doing well, that means you are telling that is the profit, is the business generating some profit. But profit maximization is generally considered as a traditional approach, and it is considered as a very narrow approach, because organizations try all possible ways to maximize profits, and this may lead to some problems. But yet profit maximization is considered as a parameter for measuring efficiency. Is the organization running efficiently or not? How do you know it? What is the parameter to decide it? That is based on profit. Now coming to wealth maximization, while profit maximization was called as a traditional approach, wealth maximization is considered as a modern approach. When you say wealth, you talk of value. As an organization created value for it. Now how is value determined? If profit you determine as income minus expenses, how do you determine value? You determine it by means of the net present value of the business, net present worth of the business. What is the worth of the business today? So that will indicate the wealth of the organization. Should profit maximization be the only objective of an organization? There are arguments for and against such an objective. When you see the arguments for such objective, it is told that profit is a barometer of business success. What is a barometer? Barometer is a measuring instrument. It measures the success of the business. Is the business running successfully? How will you determine it? Only when you earn the profits. Then it meets the needs of all the departments. Only when you earn profits, you will be able to use that money to distribute the resources to all the departments. So profit should be earned. That is what these two statements say. Now when you see the arguments against profit maximization, first thing is, the term profit is not a clear term. There are so many terms which can be used for indicating profit. There is net profit, there is gross profit, there is profit before tax, there is profit after tax. So when you decide profit maximization, which should you maximize? Should you maximize the net profit or the gross profit or before tax or after tax profit? So that is sort of not clear. Then when you have profit maximization as your objective, you tend to exploit your employees. You intend to pay them very less, not share the profits with them. So such kind of improper practices may creep into the organization. Similarly, you may also try to exploit the customers. You may try to overcharge the prices and sometimes reduce the quality. So that time the customers may also be at a disadvantage. All this you do only for the purpose of maximizing your profits. Then it may lead to cutthroat competition. Cutthroat competition is at the cost of the competitors. You try to earn profits. You try to remove them from the market in order to maximize your profits. Then it ignores the time value of money. So profit is an immediate concept. So you try to find out whether immediately you are earning profit, but what is the worth of that money after a certain period of time, that is not totally ignored. So that's why it is told that it ignores the time value of money. So profit maximization has both its advantages and its disadvantages. Similarly, wealth maximization has its arguments for and against. When you say for, it improves the value for the shareholders. Where do the shareholders get their returns from? Only when there is something above the actual profits, they get some value in terms of the growth in the value of their shares that they have. Then when profit maximization did not consider the time value of money, wealth maximization considers the time value of money, and it enables allocation of resources. So you can plan ahead for allocation of resources to various investment opportunities. But what are the arguments against? You cannot tell that I only aim to maximize the wealth. Only when profit is maximized, then you can move on to the wealth maximization. So it can be achieved only by profit maximization. But again, it is difficult to estimate the accurate value of wealth. How do you measure wealth? So there are some things which cannot be actually given the correct monetary value. So whereas in terms for profit, you can clearly say it is the income minus expenses. So estimating the value of wealth, that is correct value of wealth, may be a bit difficult. And then there may be ownership and management controversy. The owners or the shareholders may want more dividend or long-term growth in the value of the shares, whereas the managers may want to meet their immediate requirements, pay well to the employees, and exploit the market. So this sort of contradicts both their aims. So if you see, there are arguments for and against both profit maximization and wealth maximization. But generally, wealth maximization is considered as a better objective. Why? Because it has certain advantages. What are the advantages? It sort of helps to satisfy all the stakeholders. Who are the stakeholders? First, you have the customers. So you can provide better service to the customers. You can keep improving on your products. You can provide innovative products. So this kind of facilities can be provided only when there is sufficient wealth to support such efforts. Then it can also help the employees. How do you help the employees? You can provide them better working conditions, better incentives, better bonus. Shareholders also get long-term returns in terms of dividend. And for the government also, you can pay your dues properly, you can pay the taxes properly. And in terms of managers, they have sufficient resources to carry on the organization in a better way. And even you can give back to the society. Only when you have sufficient wealth accumulated, you can give back or do back to the society through CSR or corporate social responsibility activities. So wealth maximization is considered to satisfy a lot more of the stakeholders. Let's have a recap of what has been dealt in this video. We have talked about the meaning, definition of both finance and financial management, the scope of finance, where all it is applicable in different departments. Then what is the primary objectives? Primary objectives is say wealth maximization and profit maximization. Then we have talked about arguments for and against wealth maximization and profit maximization. Then comparatively, what are the advantages of wealth maximization? Thank you.